Hello and welcome to the trade. Before we get to the charts, let's take a look at what's going on at a macro level. President Trump saying a preliminary agreement to end the war in the Gulf has already been signed between the United States and Iran. He made the comment as he arrived in France for a G7 summit, saying that Vice President J.D. Vance would attend a formal signing ceremony in Geneva on Friday. The agreement expected to see a reopening of the blockaded Strait of Hormuz and extend a ceasefire for 60 days, allowing negotiators to tackle issues such as the future of Iran's nuclear program. Another likely sticking point, though, is Lebanon, with Iran demanding a full cessation of hostilities there and Israel's withdrawal, which it has refused to commit to. Well, US Treasury yields have fallen to a one-month low following confirmation of a deal between the US and Iran. The 2-year around 4.07%, the 10-year at 4.47%. Australian 3-year bond yield futures rose to 4.45%, the 10-year at 4.88%, ahead of today's RBA decision on rates. US dollar index down slightly, the Aussie trading at 70.7 US cents. Well, let's now get across some key charts, beginning with a look at some of those currencies. Joining us, Hebe Chen from Vantage Markets. Hebe, welcome back to you. Now, we were just mentioning a number of central banks meeting this week, including our own RBA and the Bank of Japan. So, take a look at that pairing in terms of the currencies.
Yeah, good morning, Andrew. Thank you for having me today. As you mentioned, this is a quite headline-intensive day. We have two central bank meetings that will announce their decisions. A lot of the watch for the next coming up couple hours. I think that I will definitely putting my eyes squarely on one pair is Aussie dollars versus JPY, which is the one that will probably face the highest uncertainty today. Either message coming from both central bank will quite stir these pairs quite profoundly, but even that, looking for the technical chart, you can see that investors or the chart itself is also ready for some of the key breakouts today. Technically, you can see the price as a pullback. We're seeing that after such a straight, cleaned, ascending line starting from last year, this pair is now getting into the highest level in over a decade, and the prices seems to getting into a consolidation phase in the past 4 weeks. Now, the prices at this stage is sitting just close to a 20 and 50 days moving average, and you can show that seeing the buyers and sellers are both quite hesitant because of the key macro and fundamental move for that. More importantly, you can see the border uptrend still quite valid. The price still sitting above the 200-day simple moving averages. Near term, the key levels I'm watching, I think the key range is actually quite clear. 112 will be the key support, 114 will be the initial resistance, and 115 will be the next breakout line. And that will be in the condition that we have a hawkish hold from RBA and a bit of the cautious tone from the Bank of Japan. That is one of the playbook could happening. But on the other side, if we have a quite hawkish Bank of Japan's statements after the interest rate potentially on the card for today, or we have a more hesitate message coming from the RBA, and then chances we could see the break below 112, and that will open the way down to 109, which is the 2024 peak, with the 1110 that could be the bottom for the pullback that could happen.
All right, that's going to be one to watch, particularly as the result of those central bank meetings this week. Hebe, let's turn to equities. Obviously, in the wake of what we've seen out of the Middle East and those that war trade unwinding, we've seen oil obviously plummet. So, taking a look at some of those travel stocks, in particular Qantas, and how it's likely to benefit. What are you seeing on the chart?
Well, yes, I think obviously this week we are entering into the next phase of the geopolitical tension, and if all the headlines seems the peace talks is processed as expected, I think Qantas will be the one that is probably the most cleanest ASX post-war relief trade. Fundamentally, it will benefit from two sides. Once lower oil prices help to improve the margin. On the other hand, the easing geopolitical tension will also help to boost the travel demand. So I think the Qantas will kind of seeing the more wins from this post-war dynamic. Technically, I'm using the weekly chart today because two reasons. Number one is that I think the bigger setup is probably more important here. And another one is I want to highlight a breakthrough on the cost. And this is the price gap in between $9.10 to a full $10 gap. And this is exactly the price gap left when the conflict first broke out early this year. So filling this gap, I think that is quite basically means the Qantas prices have moved forward and overcome the pressure from the geopolitical tension. At the same time, after breaking up this level, this price gap, the price is also ready to test the descending trend line starting from the July 2025. That's also quite meaningful for the bull buyers. And also above that, the next price level looking forward, it will be a 1076 or even the $11 level. So overall, I think the current setup combined with the fundamental changes after the post-war dynamic, I think it's quite reasonable to expect some breakthrough for Qantas moving forward.
And finally, Hebe, let's take a look at Sigma Healthcare. Now, a bit of a relief rally we have seen on the chart because it has now dropped its acquisition of Boots in the UK. Talk us through it.
Yes, indeed. A bit of relief after a roller coaster run in the past couple of weeks. You see a hard rally yesterday. Now is bringing the prices up, but still you can see the quite heavy resistance that are putting the ascending trend line here. And after prices breaking down below that tunnel, you can see the multiple layers of pressures just right around the corner. Apart from the 2050, which it seems the price is trying to conquer yesterday and today, and is the bottom of the descending trend line, that will be the near-term resistance. Overall, that you can see that this is the prices after last year's momentum. It seems to move quite squarely in between the 276 to 320. I think that overall near term, even that it's already yesterday a bit of relief, but still a lot of pressures now just right around the corner for the prices, and it will be quite challenging if the price trying to conquer it and retreat back into above 297.
That is the play for Sigma. Hebe, great to get across what you're seeing on the charts. Thanks for joining us at Vantage Markets. And that is the trade.